The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the December 30th, terrific Tuesday edition of Hour 2 of The Trader's Edge. I'm your host, Steve Rhodes, and I hope that you're off to just a terrific start of your day as you're preparing for your New Year's festivities out there. You know, celebrations, party poppers, maybe some fireworks, maybe some bubbly. Just be safe out there, folks. No drinking and driving. Cabs, walking, all those other things out there. You don't want to endanger the lives of others, let alone yourself. Hey, let's always remember, especially as we come into the new year out here, and many are going to make resolutions, we should always remember that what's talked about, well, that just really becomes a dream. But what's envisioned, what you can truly envision, hey, that becomes exciting. And, of course, what's planned becomes possible. But the most important thing is schedule it. Because when you schedule something, that is real. And I want to thank you for scheduling your time with me. I am here to serve you. That means I'd love to hear from you as well. Give me a call at 877-927-6648. Internationally, you can reach out at 727-445-1044. Remember, if you've got a question, that's right, somebody else got that exact same question. So don't do it for you. Don't do it for me. Do it for someone else. What a way to begin your year out there. Random act of kindness. This is Terrific Tuesday. Of course, it's Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we got the Dow. It is trading off about 60 points, trading out at 17,979. Hey, back below that 18,000 level. S&P down 8 points. She's trading at 2,082. Composite off 22 points at 47.85. Russell down 4 points. DAX off 121. FTSE down 92. Goldilocks on the move on the way up, trading up $24, trading at 1206. Looks to me like at least intraday wants to trade a bit higher. We'll see. Silver is up 57 cents. She's trading at $16.35. Light sweet crude up 14 pennies at $53.74 as we speak right now. Leading the charge, the upside, Neuroderm Limited up 75% out there. Wow, they have saved the planet. That's up $4.63 out here. You got a lot of the pro shares, gold-looking stocks. They're all trading the upside. Whole Foods Market. Hey, we got a friend in Chicago that loves to trade Whole Foods Markets. Let's look at Whole Foods Market. WFM is the ticker symbol. Why are they trading the upside? I don't see the reason why. We're looking at a daily chart out here, but let's go take a look at Whole Food Market out here. Of course, it is a great place to shop and drop a wad out there. Now, as we take a look at Whole Foods, this thing had broken out recently. Did it form a big island? Yeah, it did. Whole Foods Market's got this huge island bottom reversal. It's about as bullish as you can get as far as a pattern. Now, normally you don't see them like this. This is a chain of islands, is the way I'll take a look at it. And what I'm looking at here, folks, when you take a look at Whole Foods, is the trading session of May the 7th. Whole Foods had gapped down with some good volume behind that move, too. 49 million shares. Got down to a low of 37.31. I'm not so interested necessarily in that low. I'm more interested in the bounce that came back into the gap, which was on June 13th. So the high there was 42.90. Now that high, 42.90, versus the gap up high on the trading session November the 6th, that low was 43.37. So we're benchmarking 43.37 versus 42.90. So we have a little gap there. That gap creates this entire chain of dates, which goes from May 7th through November 5th, and has created one heck of an island bottom reversal pattern out there. It does not get, usually you see these take place over 3 trading sessions, one down, in any event, it's typically over a 3 trading. Sometimes it can be more. In this case here, it's obviously more. So Whole Foods has, is giving you a pretty big pretty big reversal signal. Now, where's Whole Foods traveling to? That's a good question. First thing is the A to B equals CD pattern that you would take a look at. Not much of a retracement here, but the B point that I would be looking at would be this trading session here from November 11. And there was 8.4 million shares. And yesterday you moved above it with only 4 million shares. Light volume, obviously. Today you've done 1.2 million shares out there. You've got another swing that you could use or take a look at. That is from December 1st, 3.7 million shares, and yesterday 4.4. Let's use that. That looks like that could be the A to B equals C to the upside. No real retracement out here. Of course, we look at that pattern out here inside of Whole Foods, says that things are doing well in Whole Foods land out here. I would give you a price projection of about 60-40, maybe $64. Let's put this on a longer-term chart. Let's go see what Whole Foods is doing on a monthly chart out here. Get some kind of feel for what we've got. Boy, Whole Foods is doing what it can to get above this high out here, this resistance of this downdraft that began that month of May, 200 million shares. Now, you're going to try to take that on, or it's going to try to take that on with only 70 million shares out here. But if we just look at retracements from high to low inside of Whole Foods using the monthly chart out here, what we're going to see is that it's up above the 0.382 retracement. Whole Foods ought to get to 54.32. Maybe even 59.27 out there, and that's what's going on inside of its stock chart. Anything else that we can see here that's moving in the marketplace? Well, you got Akamai Technology, AKAM. Netflix is trading to the upside out here. To the downside, Eagle Materials, EXP, Regeneron Pharmaceuticals, Green Mountain Coffee Roasters. All those equities are moving to the downside. Before we go take a look at some of those individual equities out here, let's go take a look at something that I was showing during the last hour as we're coming in the last segment. We were focused in on the Dow. Now, what we can see right here, if you watch us on Tiger TV, again, we have to wait for the trading session to be over. But what I can tell you, intra-session right now, if the Dow were to close like this, you've got the price oscillator inside of the Dow back below zero. Never a good scene out there, because as long as the price oscillator stays below zero, can't control what takes place next, can't control what takes place tomorrow. I can't tell you what the tendency is on a New Year's Eve. I can't tell you what the tendency is the day after New Year's out there. But at this stage here, forget about all the tendencies. It's what's the market communicating to us. Right now there's problems in River City inside of the Dow with its price oscillator. It's not much in the way of damage. We're not that far off of its all-time high, right? Its all-time high being 2 trading sessions ago up at 18,103. You're at 17,986. Not that big of a deal out here. Not a ton of price erosion. But there are some problems as we speak right now. This is something that we'll want to pay attention to tomorrow morning or at the evening, at the close this evening out here. As well, it is at the VIX index, which is trading just slightly above its 50-day exponential moving average. That exponential moving average being 1553. You're at 1572 right now. That makes a difference. Price erosion inside of a market takes place, inside the S&P, takes place when the VIX index closes above its 50-day exponential moving average. Don't know what the close is going to be today, but it is something to pay attention to. Both those two charts out there are absolutely worth noting and focusing on. Now, that's really the short-term side of where we're at. But where are we when we take a look at the long-term side of things out here? So on the long-term side of things, I want to do this. I'm going to do a couple of different things. Because when we take a look at 2014 and we try to identify important messages inside of the market, let's go take a look at what may be one of the most important messages here. Now, I'm going to switch over and we're going to take a look at a couple of different charts. So my monthly chart out here. One of the things that we're going to look at, I'm going to actually do it on this chart here first. We're going to look at the New York Stock Exchange, and I'm going to put this on a, let's see, what time frame should I put this on? Let's put this on a monthly time frame for the time being. So let's come over to the monthly. And what I want to show you is what I think, and let me get rid of that. I don't know what that was referencing. Okay. What we're going to do is we're going to reference this high right here, which is October of 2007. And that high, by the way, is priced out at 10,387.17 out here. So let me move this off to the side. Now, this is a monthly chart that we're taking a look at. If I put the weekly, the daily chart up here, you're going to see you'll see more banging away at this 10,387. Now, if we take a look at the New York Stock Exchange, here's really what its consolidation pattern looks like. So let's put the consolidation lows in here. Those are going to be somewhere right around here. So we can say that the New York Stock Exchange, since May of 1997, right? 1997, we're in 2000, about to get to 2015 out here. So 97, so you're at 15, 17, 15, 18 years. So we've had an 18-year consolidation, 17 to 18-year consolidation pattern inside the New York Stock Exchange. Now, the New York Stock Exchange, the wider swath of the marketplace, the wider, the better, the overall breadth of the marketplace. And what we can see here is that the New York Stock Exchange, again, we're going to look at it longer term just to get a feel for what's going on. I think we spent plenty of time during that first hour of the show taking a look at shorter term charts out here. And it was the month of March of 2014, where price clearly broke above that 10,387 mark. Now, when you break above a horizontal level of resistance, which is what we were looking at in this case here, you like to see price come back and test it and prove that it's a real breakout. Well, the very next month, which is kind of easy to do, right? The very next month, meaning April 2014, it did come back and test it and reject it. That's all that you need to do. Come back, test it once, then you're off to the races. But what the New York Stock Exchange did, what the market has done here is, on a monthly basis, which has a ton of meaning out here. The month of October, price came back and tested that level. In fact, it got down below that level. It got down all the way to 98.86 before it just simply used it as a little trampoline effect and moved higher out here. But it did. It held. 10,387.17 held. In the month of December, we also saw that little scary low out there, right? We saw price get down to 10,360 versus 10,387. Guess what? We've seen now 3 tests of this line out here. The key level to be watching with regard to these markets is going to be inside the New York Stock Exchange, because this thing has been tested and rejected and tested and rejected, and one more time in December, tested and rejected. We got 3 tests of this area. This should be a strong level of support. From the New York Stock Exchange, it's going to hold 10,387, and it's just going to continue to simply move higher. And by the way, the consolidation level on this, it's massive. It's 6,000 points. You're talking about a consolidation low of 43.95 and a consolidation high of 10,387. That's 6,000 points, folks. Give or take $5. 6,000 points. That says you can add 6,000 to 10,387, and that is its longer-term price projection move inside of the New York Stock Exchange. Not tomorrow, not the next day, but the NYSE, in my opinion, probably is the most important chart for us to focus on for 2015. Because if we do see a monthly price close below 10,387.17, it says it was a false breakout to the upside. But until then, it's a real breakout. This is Steve Rhodes. This is TFNN. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 48 points right now. Let's go back to that New York Stock Exchange email coming in here during the break, asking the question of, hey, well, where's it going next? And when we take a look at this is the monthly chart again that we're looking at for the New York Stock Exchange. What I added to the chart during that break was the A to B equals CD pattern to the upside. And so if you're wondering, hey, why right now price projection, by the way, 10,951. We're trading at 10,944. As we speak right now. So if you're wondering, hey, why did price stop once it got above the consolidation break, that October 2007 level? Why did it stop in that 10,951 level, which is what it did? It actually closed the month of June at 10,979 out there. And here's really the key with regard to now the New York Stock Exchange and where it will head to. I know this candle right here, to many, looks like a hammer candle, or some might even consider calling it a hanging man candle out here. It's neither. The body of there's just been simply there's just sideways movement out here, no directional change inside of the New York Stock Exchange. Here's the real keys with the New York Stock Exchange. You had a little bullish engulfing, or bearish engulfing candle that formed during the month of July. You had a little dark cloud cover candle that formed during the month of September out here. And that says that that's really where our resistance is. So the key levels to be watching for signals inside of the NYSE for it to move up to its next level. And by the way, its next level would be the 1 to 1.272. A to B equals CD, price projection to the upside, which is 12,185. That says that you want to see price close above these reversal signals. This bearish engulfing candle is what we use, 11,105.85. So that's really a number to write down on your pad of paper, 11,105.85. You are trading at 10,350. So, you know, you've got about another, 600 points or so. Is that right? Something like, would you do the math on it? 10, whatever. I don't have them, but 11,105. 11,105. No, you're at 10,947. I was looking at the wrong thing. So you've got about 150 point move, some 140, 130 point move or so to the upside. But a close above that level, that says 12,185 is in the cards for the New York Stock Exchange out there. The Dow, if we go take a look at the Dow long term now, in the case of the Dow has actually gone ahead and completed really its consolidation move out here. And its consolidation move was about a 4,500 point move. That was a 14-year consolidation. Said that it needed to. Now remember, when you break a consolidation's move, we kind of call it a measured move. That says that price should be equal to or greater than that consolidation level. In the case of the Dow, it's been the latter. It's been the greater than level. And so right now we're just paying attention to the A to B equals CD pattern, much like we just took a look at inside the NYSE. In the case of the Dow, trading below 18,000. As Terry is pointing out inside our Tiger's Den. And folks, if you haven't had a chance to, if you're going to go ahead and make a New Year's resolution, and one of your resolutions is to elevate your game, come on over to the homepage of TFNN.com, because we got some good gamers inside our Tiger's Den. They will help you to elevate that level for sure. And Terry is right. Price is below the 18,000 mark inside the Dow, but it doesn't have a whole ton of meaning out there, meaning no reversal signal or anything along those lines out here. What the Dow so far is doing on a monthly chart, it says that it wants to get up to 18,553 as its next move out here, and that becomes the 1 to 1.272 A to B equals CD pattern to the upside, and that's what the Dow is signaling to us. Other charts that are worth noting. So I'd have to say, if I were going to put priorities, which I'm doing for you, so as we take a look at 2015 and what to really focus on, I have to list that New York Stock Exchange as one of the keys to be watching. I would say then the second chart really worth watching out here, what I want you to focus on, is going to be the Russell 2000. The Russell 2000, first of all, if you're watching us on Tiger TV, what you see is a consolidation pattern, much like we looked at inside of the NYSE, and it is in essence a 17-year, 500-point consolidation. All right. Now that 500-point consolidation, price broke out above that level. It was back here during the month of January in 2015. January in 2013. The top of the consolidation happens to be It's June 2007 swing point high at 856. So when we get back, let's go take a look at the Russell 2000 and the meaning behind the move last Friday. Muy importante. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 55 points right now, trading at 17,983. S&P down 7. Composite is off at 19. Russell 2000 is down $2.50, trading at 12.16. So it's back to the Russell 2000. Now, let me do this first. We'll put the monthly chart up in a moment. So in the case of the Russell 2000, what do we know? First thing, this is a weekly chart that we have up on our screen. The Russell 2000 is the king or queen of consolidation patterns, that's for sure. And it's been traveling in a consolidation pattern since October of 2013. The bottom of that consolidation pattern is about 1,043. We'll just call it 1,050 to just from a rounding standpoint. The top of the consolidation is really right around the 12,82 mark. We'll just simply call it 1,200. So from 1050 to 1200, we're dealing with the 150-point consolidation. If you add 150 to 1200, that's going to give you 1350. So if, in fact, Russell 2000 breaks above its consolidation, which, oh, by the way, it did it just slightly on Friday last week while everybody was kind of sleeping at the switch, because it actually closed the week last week at 1215.21. 1215.21 is above the swing point from June 30th. That June 30th high was the week that began June 30th. That high was 1213, so you're above it. It closed above the swing point on the top of the consolidation that began March 3rd, 2014. That was at 1212. So what we may be seeing here, what you ideally want to see from the bullish side, is you want to see price maybe come back, test that area, reject it, and then continue to move higher, much like we saw with those 3 tests inside the New York Stock Exchange. If, in fact, so the second chart that we want to focus on, and I'd actually kind of maybe elevate this to chart number 1 versus the NYSE, because in the case of the Russell 2000, price is so close to that breakout area that it probably gives us that first signal. But if the Russell is able to hold this consolidation, what it is signaling to us is a 150-point move to the upside. If it does not hold this area, it says, okay, it was a false break. Then we go ahead and we start measuring, where could it pull back to. But right now, let's focus on what it is communicating to us. And what it's communicating to us is you've got a breakout. That on the weekly, because of a shorter term, only a 1 year, a little over 1 year consolidation pattern, says 1350. Then, when you come take a look at the Russell 2000 on a monthly chart out here, what it also had factored in is 1350 of its monthly 17-year consolidation break. Remember, it's a measured move. Equal to or greater than is really its signal. You can see here, if you focus in on the right-hand, upper right-hand side of my chart, you can see where we've just really, from a monthly standpoint, just simply been chugging along. Now, the month that was for July 2014, the top of which is 1213.50 on a monthly basis, that was a bearish engulfing candle. If in fact price can stay above 1213.50, old resistance becomes new support and would show us a change in polarity. So the number to really key in off of on a monthly chart inside of the Russell 2000 is going to be just that. It's going to be that high from July of 2014, 1213.50. So that's something else to be focusing on and to pay attention to. And that's inside the Russell. So the two most important charts on your screen, on your watch list, should be the Russell 2000 and the New York Stock Exchange out there. The Dow, not so much. In the case of the NASDAQ composite, we know about the composite. We've talked about this for a long time, and that is at the 2,000 high, that once you close inside the 2,000 high, which is what the composite has done, we've identified that as being the 43.55, volume or not. And what we saw here, if I put my crosshair up on the screen, when you close inside a swing point, volume or not, says you're going to go likely test the top or the bottom of it. Price is moving down and you close into a swing point, says price is going to move to the downside. That's why we took a look at that. Maybe it was during the first hour we looked at some of the gold equities out there on a monthly basis. And they were not giving us a really wonderful signs out here because they were trading in their 2008 swing point, the low. Light volume, that's good, but still trading inside the swing point. In the case of the NASDAQ composite, that looks like it wants to go test the high of that swing point at a minimum. Now, the NASDAQ composite has also completed its measured move. Its measured move was a 13-year, 1,500-point consolidation range. It broke above that level, and it did that back on the trading session in February. This was back in 2012. Broke above it, came back and tested it back in the June of 2012 time frame. The last and final test was in November 2012 when it was off to the races out here. A to B equals CD. It's up above the 1 to 1.272. It's on its way to 1.618, which is 49.23. The reality is, hey, if you're going to make it to 49.23, if you're going to make it in New York, you're going to make it all the way up to the top of that swing, and that says that we're going to see the composite go test that high at 51.32. But its measured move, in essence, is done. Does it mean it's an irrelevant chart? No, not at all. But its measured move is done. Again, the NYSE, the Russell 2000, I think are two biggies. Now, we also have the S&P 500. The S&P 500 has a 2,300 point price projection. 2,350 is its price projection out here. As I pull this back, this was in a 16-year consolidation pattern that it broke out of. That's an 800 point range. That says that we ought to see 2,350. Well, the 1 to 1.618, A to B equals CD to the upside on a monthly chart out here. That gives us a price projection of 2,213 over the long haul, over the course, and you're at 2,083. To get to 2213, hey, we saw the markets move inside the S&P by over 100 points just off of December 18. So that's an easy thing for it to eventually do here, especially during this favorable seasonal cycle. So what does all that mean? Well, what it means is, and what should you expect for January? What you should expect for January, actually, is you expect the Russell 2000, this weekly chart, to fail. So I'm going to set this up. I just kind of gave you the longer-term picture. What's Stevie's expectation? I expect we're going to see the Russell 2000 pull back into this consolidation, and it's going to fail the breakout here in the early part of January. So maybe it closes above this, and ideally it will. I mean, that's what it really should do. It should close above that consolidation in December. So we've got the first move. Then we see it pull back in January into the consolidation pattern, and then it's going to form the final bottom before it takes off to the upside out here. And that should take place sometime in January. It's not going to be next week. It's probably not going to be the week after, but maybe it's going to be the week after that out there. And that's what I expect to see take place. So basically what I'm saying is I can't tell you whether it's today or it's tomorrow or it's sometime next week that we see the market top out here. What I can say is that if we take a look at the Dow right now, the Dow with regard to its summation index, it's still below that zero line, so it's giving us that short-term topping pattern out here. Now, short-term, the markets could move lower for a couple of weeks. It may reject this area, just trade lower today, and for the next couple of days, trade higher. There is going to be a lower low. There's going to be a buyable low that's going to come in the month of January. How much conviction do I have in that? Remember the conviction as the market was moving down into October, and I said it was going to make a major bottom? It's going to be that, it's going to do the same type of a thing. We also knew that there was going to be another bottom that was going to form. Now, how do we know that? Well, we just simply took a look at seasonal cycle patterns that were out there. They were off just by a tad. I think we were off by a day or so out here. The same kind of pattern is really in play inside of the Dow. To help identify where the markets want to go on a longer-term basis, one of the things, we showed this pattern here. Let me switch over. Give me a moment to do this. I think it's going to be on this set of charts right here. Let me close that out right there. It's going to be this right here. Back when the markets were making their lows back in October, Marty Zweig, he's got, he passed away a couple of years ago, I believe it was, but he's got this great signal called the Zweig breadth thrust signal out here. Now, I track this. I keep track of it on a separate spreadsheet. Then I'll go ahead and update my chart here, which I've done now. There's only been 4 of these signals in the last 40 years, but each of them have formed significant market bottoms. We've actually, on my chart here that we're taking a look at, we're looking at 2 of those signals. One of those signals came all the way back here. It's not of coincidence that it occurs in October, by the way. But we saw back on October the 8th, we saw that signal come to fruition back in 2013. And, of course, those lows have never been penetrated since that period of time. We saw a nice retracement. That was back in February of 2014. It's like a 0.618 retracement or 0.786 retracement off the October low to the high that was put in December of 2013, and then moved lower into February of 2014. Did I just kind of give you maybe a little bit of a signal here? Should I say that? Let me say that again a little bit slower. Okay. If we take a look at the Zweig thrust signal, major bottoming signal, that came in October 2013. Markets move higher up into December 31st, 2013. Pull back and form a pattern into February 2014. Kind of got that picture out there? Okay, this is Stevie's New Year and Christmas and Hanukkah and you name it, birthday present, the whole kit and caboodle out here. Let's fast forward to a year. Let's fast forward to October 15th, 2007. What do we get? The Zweig breadth thrust signal, major bottom signal out here. Market's going to move higher in 2013. It moved higher into when? Yeah, December 31st, January 2nd, right around there. What is our market likely to do? Again, this is the New York Stock Exchange. Likely to do the same thing. Back here, markets move lower into when? Into February of 2014. So, you think that the patterns repeat out here? Guess what? Patterns in life, they repeat all the time. All the time out here. Now, we could get some really big days, really big market breadth days. We don't have it right now going on today. Don't know how it's going to end, though. But if we get a real big market breadth day today and one tomorrow, I'll even extend it through Friday out there. We actually, that market low that came in back here in December, we're actually very close to seeing a third Zweig market breadth signal. It's going to require us to have pretty decent net advancing issues versus declining issues. But all you need to do is, what's that number need to be? I think I have it over on a spreadsheet somewhere. In fact, I know that I do. We probably need to see around 2,200 net advancing issues and maybe about 900 net declining issues out there. So my whole point is that we got a major bottom signal back here in October. I expect just seasonality of the market to go ahead and pull back and form its next low out here, and then it's off to the races for the rest of the winter, rest of that time period. Let's go to Don in Odessa, Florida.
Hey, Steve, it's Don Parker.
How you doing, Don?
I'm doing fine.
Thanks for calling.
I guess you had a good holiday.
Yes, how about yourself?
You always sound like you're having a holiday every day.
Thank you. I appreciate that. Even when I'm feeling sick, I'm a little under the weather.
You really do. Listen, I know that now after having listened to your program today,
yes,
this is probably not a good time for me to be even thinking about buying anything, but I've been watching the fertilizer stocks, and specifically Rentec, RNF.
Okay.
And I was actually going to buy that burger today because it reached my 0.618 from the bottom here, and
yep.
It looked like we've got a good ABC up going. But now I'm concerned after listening to you.
Well, you got to trade each thing independently, I suppose. I mean, what we'd have to really do here, let's do this. Let's take this stock chart and let's actually add the S&P 500 to it. See if there's a correlation there, right? I mean, would that be, would that make sense then to just see if that correlation exists all the time?
Well, taking from something that you said a while ago, taking gold and the dollar separately.
Yeah.
Why shouldn't we do that here?
No, you should. You absolutely should. I mean, you should trade the chart out here. I guess what is it that I said that would have you concerned about going ahead and taking your long position inside Rentec? The mere fact that the market would pull back?
Yeah, your whole discussion about the seasonality.
Yeah.
And giving us that good Christmas and New Year's present for February.
Yeah. The thing you'd have to do, or you'd want to certainly do, is you want to see if does this market actually, track, let's say, the S&P 500.
I understand
and so
what you're saying.
If I do that, let me just put that in here. Maybe it does. I don't know if it does or it doesn't, but we're going to find out in a second if it actually does. And I would have to say, so that's really at the very bottom portion of my screen out here. So I'm getting rid of a couple of other things. I would say, not necessarily.
Yeah.
I'd say not necessarily. So I'm going to go ahead and turn that off. So I would say, now you were taking a look at this chart specifically because of what? What is it that's giving you the clue? Was it that bar? Was it that trading session of December 11th, which had some volume to the upside?
Let me pull my chart back up here.
Now we're going to go to break here in just a moment. Can you hold on for the last
sure
segment?
Can. Sure.
Okay. So we'll go back out to Don in Odessa. We're going to take a look at the Rentec Nitrogen Partners. RNF is a ticker symbol. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Right now we've got the Dow. She is trading. Come on, click, click, click. Trading off about 52 points at 17,985. S&P is off 6. We're on the line with Don in Odessa, Florida. We're taking a look at ticker symbol RNF. You know what I was doing just as we were coming on back on the air here, Don, was I was taking a look at Potash and Mosaic as well, just to see how each of those were trading. So, what is it about Rentec Nitrogen that you're looking at versus those other charts, versus others?
My complete thought process was that all of these are in a 2-year downturn. looks like they're bottoming out. We have a confirmed ABC up on this particular one. And natural gas is down quite a bit. Looks like it's going to be down for a while. And that it's directly related to their cost. So that's why.
Yeah, so when I take a look at the three, and I don't know, if you're not watching this on Tiger TV right now, the top chart is potash, the center chart is Mosaic, and the third chart is Rentec. Do all three of them do basically the same thing?
No. Potash,
they don't. Okay.
No, potash more of a mining. I believe that comes from the ground. It's not.
Okay. So let's skip that then altogether. Let's not take a look at it. Let's just simply go back to the chart pattern that you're looking at inside of Rentec. So go ahead.
I was going to tell you Mosaic. They're a phosphate company.
Got it. Okay. All right. So let's not take a look at that. As far as you've got that nice sign of strength for sure that took place on the trading session of December the 11th. You're still trading inside that session. That's in essence your breakout level. It's pulling back with light volume. Today it's done 461,000 shares. A couple days ago, 75,000 shares. A couple days ago, moved to the upside with 300,000. We've only been trading for an hour and a half. 75, it could actually do close to that kind of volume today. I wouldn't expect it. This is beyond your buy point. Is that what you're saying?
I'm not looking at it just yet. What is the price of it?
It's $9.74 as we speak right now.
Well, I was looking at the 382, which was 983, but the next one down is 942, and I was going to base that on how it was working.
Yeah, I like the 942 area better. 942, 947 for an entry point. You're going to have to. It's had a little key reversal session on the trading session of December 16th, so your stop likely needs to be placed below 875. So just, come up with the right position size or scale into it. But your real level of support is going to be that December 16th level. Now, the cool thing about that key reversal session, Don, is the high is 950. So if your entry point is around the 947, 949-ish type range, you want to see it get back above that 950 level as well. So come back, test it. Do it less than 131,000 shares, and then maybe you're off to the races there. Then maybe you've got your A to B equals CD to the upside.
I'm not even going to give it 875. If I'm off by more than a dime or so, it's gone.
Okay, all righty. Well, I hope that helps you out. And, let me wish you and your family a Happy New Year. And as always, thanks for listening in and your support here at TFNN.
Thanks, Tom.
You bet.
Steve.
No, you can call me Tom. That's a compliment.
Okay, bye-bye.
Okay, thanks a lot. That was Don in Odessa. Folks, stay tuned. Our man Basil Chapman, he is up next. And it is Terrific Tuesday. That means we got Chad Coco doing the Options Hour. So have a great Tuesday, folks. I look forward to seeing you tomorrow morning. If you are traveling, be safe out there, and we'll see you soon. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.